Hello, this is Eric Parnell, Chief Market Strategist from Great Value Advisor Group. And today I'm here to talk to you about market history. We always hear that expression, past performance is no indicator of future returns. And one of the things that we can lose sight of when we're going through markets at any given point in time is the longer term perspective. Let's take a look back over the last 25 years. That's not an immaterial amount of time. For some investors, that's a full life cycle of their investing experience. If I were to ask you, what was the best performing asset class over the last 25 years between stocks, bonds, commodities, currencies, and precious metals, what would you think? Now, most investors would be inclined to think it's been stocks, because after all, that's the story that everybody focuses on, and they perform so well in recent years. But the reality of it is, gold has been the best performing asset class over the last 25 years, dating all the way back to 1999. Now, that's a surprise to many investors. Another thing that might even be more surprising, given the strong performance of stocks that we've seen for so many years, is that long-term treasuries, bonds, were performing better than stocks over this 25-year period, all the way up until about 3 or 4 years ago. That highlights an important perspective about investing that many people lose sight of. Asset classes are constantly going in and out of favor with one another. And one of the most important characteristics of long-term investing is maintaining a dedication to your philosophy and your discipline. Asset allocation isn't something that should be market timed. It's a dedicated process that you want to stick with over the long term. Certainly you make changes at the margins, but maintaining that long-term discipline to your strategy is important. This is also true when you get inside of your asset allocation. Thinking of stocks, yes, it's been a tremendous performing asset class in its own right over the last 25 years. But the temptation of so many investors is to focus on the bright, shiny object at any given point in time. Right now, that's technology, and technology has done fantastically well over the last 5 or 6 years. But if you take a look at 25-year performance across different sectors within the stock market, it's a surprise to many investors to know that consumer discretionary stocks have been the best performing sector over the last 25 years. What was the second best performing sector? Up until about 12 months ago, it was healthcare, not technology. And if you go back 6 years ago, technology was the second worst performing sector in the S&P 500 over that 25-year period, and that was just 6 years ago. It's one of the reasons it's done tremendously well, is because technology is a more volatile asset class, a more volatile sector that can go from high to low at any given point in time. So as we look out over the remainder of the decade, we continue to focus on the areas of the market that do well, stocks, technology, but it's also important to keep in mind that asset classes are constantly going in and out of favor with one another, and sectors are constantly going in and out of favor with one another. Maintain that focus on diversification and broad risk control across your investment strategy, and that is one of the keys to long-term success. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.